everyone. I'm your host, Tom Shaughnessy, and welcome back to Chain Reaction, a research-driven podcast that's a part of Delphi Digital. If you're not on Delphi's research portal, you're missing out on the critical analysis read by the top minds in the crypto space, so be sure to check it out. One quick housekeeping item. Nothing said on this podcast is a solicitation to buy or sell any security or token, or to make any financial decisions. I may personally hold tokens mentioned on the podcast, and you can view our show notes below for our complete disclosures. With that out of the way, I wanted to give a quick shout out to our wonderful sponsor, eToro. The best way to be smart about trading crypto is to use the smartest trading platform. eToro is one of the largest trading platforms in the world, with over $1 trillion in trading volume on the platform per year. U.S. customers can trade the most popular crypto assets with extraordinarily low fees. And if you're not ready to trade yet, you can practice on the platform with their virtual trading feature. Best of all, you can connect with 11 million other eToro traders around the world to discuss trading, charts, and all things crypto. You can create an account at b.tc/eToro reaction or click the link below in your show notes. Just scroll down on your phone, click the eToro link, and it'll bring you right to their website. With that, let's jump into the episode. Hey everyone, welcome back to the podcast. Today I have Matthew Finlayson, who is head of product and co-founder at Invictus. Matthew, how's it going?
Hey Tom, it's great to be here. Doing well on yourself.
Yeah, it's great to have you on. It's Sunday, so Sunday scaries are in full effect, but I'm glad we could record. So Matthew, before we dive into you and your background, what's the elevator pitch on Invictus?
Okay, starting straight with the hard ones, eh? So the elevator pitch. So Invictus is basically the next generation of asset management platform. We cater towards the new global investor who's currently, their needs aren't being served by asset management as it currently stands. And it's really not hard to substantiate that the asset management in general and the kind of fund products people are offered, that entire system is broken. And so we have a blockchain-based platform that allows us to launch funds super efficiently, direct to market. We do everything in the entire fund value chain from customer onboarding, all the way through to asset management itself. And generally that can have up to 80% cost savings on the traditional alternative.
That's interesting. I mean, so when somebody wants to start a fund in the traditional sense, what are their alternatives to Invictus? I mean, how do they generally go about it for those who are new to it?
Yeah, the asset management space, I guess, is quite full, if that makes sense. There are a huge amount of intermediaries between the end investor and the ultimate fund manager. So the kind of things you'd need to think about if you're looking to launch a fund, aside from legal structures and kind of all of that, is someone who will do client onboarding for you and do account creation, KYC, and AML procedures. Someone who will keep the cash that your clients send to you. So you'd have to have a custodian or a bank account. Someone who'll do cash settlement, and in return for that, will issue shares. So someone must do all the accounting and administration for that. And then you must have someone who keeps record of who owns what shares within your fund or what units within your fund. And there must be a whole admin staff and reconciliation staff around that thing, like that process of share creation and redemption. And then finally, you have the fund manager itself, who takes all this pooled capital and then decides what to invest in terms of the fund mandate.
At the end of the day, you guys are basically tokenizing funds, but you guys are more of the platform play, not so much focused like long-term on launching your own funds. Is that right?
Correct. So we started originally with the world's first crypto index fund because we saw there was a huge need in the market for that. And we've since launched quite a few funds ourselves on our platform. So we've got a venture capital fund, for example, a margin lending fund, another crypto fund. And there are various types. So from VC to crypto only to cash-based funds. Our most recent fund is a solar fund. And we started launching our own funds and kind of in the process of that built out this platform. And our long-term play is to have other fund managers who we think are very interesting, and we focus exclusively on the alternative asset management space at the moment. And those kind of fund managers could list their fund within our platform, and our community would be able to have access to them as well.
Yeah, that's really powerful. I mean, what's the largest hurdle that you guys kind of set out to overcome? I mean, is it access to funds for people that don't have the resources or don't have the net worth? Or I'm just kind of wondering, you guys clearly open up the fund world to a new class of investor. I'm just wondering if that was kind of the original goal.
Yeah, so that definitely was, part of the original goals we had. The main priority for Crypto 20 was just to provide, a simple option to gain exposure to this interesting asset class at the time, which was, still interesting, which was crypto assets, right? But I think the main advantage we have as our platform is really just that of financial inclusion. So if you look at the way traditional finance works, even in the most developed markets, generally a lot of interesting products like venture capital funds or property funds are reserved for the top 1% most wealthy tier of society. You need to have very high minimums, very long lockups, and it's just really not accessible to everybody. And it's even worse in developed markets where there is no access, for example, to dollar-based funds. So through tokenizing funds and through our platform, we're able to provide these kind of investment products to people who would otherwise never have been able to gain access to it. And not only that, there are a lot of features on our platform, a lot of features of our funds that are substantially better than what you get in the traditional world. For example, we allow for a 1 hour liquidity on our crypto funds, where you can invest and then redeem your share of the fund within 1 hour, which is unheard of. Even in the most mature, developed fintech market in the world, generally you have multi-day settlement times, and the comparative crypto products, especially, some of them have zero liquidity, and you're basically stuck in for 2+ years.
Yeah, that's insane. I mean, I'm looking at the fact sheet of your venture fund that you have kind of on your platform here, and I think people new to the space or people new to crypto don't kind of realize how hard it is to set up a VC fund, hundreds of thousands of dollars, and how many hurdles there are. I mean, so like when people come to you, what are the stats that they give you? Like, hey, Matthew, we got to market faster, or we were able to accept more money, or like investors are okay because now the fund is tokenized. Like, I guess, what are the key attributes that kind of, help you kind of sell your platform here?
Yeah, so that VC fund was launched by ourselves because we saw this huge opportunity within the blockchain space. And basically, your everyday guy on the street can't have access to that. So it's the first fund that, I'm aware of where we've got 4,000 investors in the fund of, say, $10 million at the moment. And traditionally, VC funds have maybe 10 to 20 limited partners. Everybody puts in at least $500,000. It's a very much a boys' club, closed-ended group. You can't gain access as a retail investor at all. So we've allowed that in our VC fund. And in addition, you can trade peer-to-peer on the secondary market. So you can get liquidity from a VC fund by trading to anybody else who's interested, which is also unheard of. Generally, VC funds have zero liquidity until the fund itself closes down. Those attributes make it very exciting for the end investors or for our community at large.
So how does that exactly work, though? I mean, because generally in VC funds, your funds are locked up for 7 years, plus or minus some extension. But like, how exactly does that work? Like, I can trade my ownership to other people, but what happens when the fund starts to wind down or redeem itself? Like, how do investors kind of get money back or their crypto back? I'm just wondering the unwind process.
Sure. So for our funds that are liquid funds, so the crypto funds, for example, you're able to redeem directly with our smart contracts to receive your share of the underlying fund value. And this is at any point in time. So in the event that the VC fund would wind down, which is not something that's at all on our horizon at the moment, we could do exactly the same kind of thing. For the continuity of the fund, we have a share buyback type scheme built in, such that once the fund surpasses some size, at this moment it's $30 million, we'll buy shares off the open market or buy units or tokens of our fund off the open market and redeem that, and burn that to increase the value for people staying in the fund. In addition, liquidity is less of a concern than traditional VC funds because we have, for example, 4,000 investors, and a traditional VC fund has 20. So it's a lot easier to find willing market participants on the secondary market who are interested in gaining, say, $500 of exposure to a blockchain VC fund. It's a lot easier to do that than it is through the cumbersome share register process of, I want to sell $2 million with Sequoia. That's nearly impossible to do, whereas in our case, it's quite frictionless.
Yeah, I mean, it's really hard for people to invest in VC funds. I mean, there's so many rules around accredited investors, qualified purchasers, all that makes it really hard to buy into a VC fund unless you're a pretty wealthy or connected individual.
Yeah. I mean, you basically can't. You can't unless you have a few $1 million and you're willing to wait 7 years.
Yeah, no, exactly. I mean, do you run into this though? Like legally, like, am I able to buy this even though I might not be accredited? Like, how does that happen? Or is that kind of not really your issue here?
Sure. So we don't sell products to the US market, I should say, first and foremost. But generally, what we're allowing through our platform is investment into a Cayman vehicle. So we're registered in the Cayman Islands. All our funds are Cayman domiciled, and we essentially have strapped blockchain rails on as an investment route into a Cayman fund structure. So because of the fact that we're structured in the Cayman Islands and their regulation around cryptocurrency specifically, we're not mandated to be under the same regulation that a traditional VC fund, for example, in the US would. And so that allows us to then market globally and have 4,000 investors, normal retail investors, well, everyone from retail investors through to institutional or very high network and individual investors.
Yeah, no, this is super interesting, Matthew. I'm probably preaching the choir here, but do you think that this is the way that the world is going to go? Or do you think that people are going to still, there's major VC funds in crypto. Everyone from Multicoin to Pantera, take your pick, and they run hundreds of millions of dollars. Do you think that the world will go your way, where we start to tokenize VC funds from the start? Or do you think that the existing VC funds in the space will eventually tokenize themselves?
I think the argument is substantially stronger for newer VC funds coming to market. And again, we're speaking about one narrow fund type in a whole range of potential products. But it makes a lot of sense if you think about democratized access to financial opportunity, right? If you want to raise $10 million, it's substantially easier to do so from, say, 10,000 people, each of whom takes on small amounts of risk. You can have really cool projects or really cool funding ideas that you otherwise wouldn't be able to because the risk is unpalatable, say, for 50 people. And this is now beyond the realm of just a VC fund, but kind of conceptually, I guess, right? So the benefits you get just in pure distribution, the number of people can show their interest are huge. And the reason why traditional VC funds don't go that route is because it's too time intensive or it's too costly for them to keep a share register, say, of 4,000 people. It doesn't work. But if you manage the fund on the blockchain, for example, where everything is done automatically and everyone's units are viewable publicly and it's secure, you don't rely on any kind of third party to do that. It enables so many more opportunities outside of just the fund construct itself. If that makes sense.
No, it definitely makes sense. I guess the other thing is the dynamics are a lot different, right? A traditional VC fund spends, months or years, raising money, having, long continuous conversations with a select group of investors.
Yeah.
Meanwhile, it seems like through your way, you could raise a VC fund off of a Medium article.
Sure, we could. You could market to investors globally, or what we've done is essentially create a community who are interested in the products that we have to offer, and we listen to them very closely to hear feedback and what it is they're interested in or what projects they think are interesting. And it was really cool to see how the community incentives around this kind of fund structure are so much more powerful than what you'd get in the traditional sense, where we would have people proposing hundreds of different projects. Oh, hey, this is an interesting thing to look into, or this is something interesting to look into. Where you might not normally get that kind of deal flow, in a normal VC that's just started up.
We're both, I'm not a lawyer, I don't think you are, but the US market is huge, right? It's kind of the market you kind of want to attack for a lot of these things, but there are just so many existing laws around VC funds and hedge funds, and crypto complicates that even more due to some lack of clarity there. How do you think that you guys will approach the US market? Do you think that this is something that you can have for US investors in the next year or 5 years? To be honest, anybody can go buy these ERC20 tokens, but I'm just wondering if, the US market's going to be more of a push for you guys as time goes on.
Sure, I definitely will. And I just want to point out, over the past 5 minutes of the conversation, VC funds are definitely the extreme end of, what's possible in terms of fund structures. The majority of what we're focusing on now is more, stable dollar-based products or property development projects or solar infrastructure projects, which are far more palatable, I guess, to the vast majority of investors. But to answer your question, the US market certainly is interesting. And I think a big point for us is to be able to go to regulators, especially in the US market, and say, okay, this is what we want to do. What kind of license do we need to operate within this jurisdiction? And at the moment, and unfortunately, this has been the case, especially in the US, for the vast majority of crypto-related projects, there's been no answer to that. And so that's why you've seen that very many crypto projects or exchanges or whatever have you don't do business in the US specifically, and it's exclusively because that clarity isn't there. But I'd hope to see that is resolved in the next 5 years or so. And I think there are a lot of very strong arguments that you can make to regulators that blockchain-based finance projects are a regulator's dream, because you can see exactly where all the inflows and outflows and exactly who owns what at any point in time. it totally makes sense from a regulator's perspective, once they're comfortable with it, to embrace this kind of technology for the next generation of products.
Moving on to your other, funds and the other things that you can do with your Perseus platform. I mean, you have upcoming funds, you have a real estate fund here and a solar fund. And the real estate fund is somewhat interesting because, there's been obviously so much talk in the crypto world about security tokens and, tokenizing individual pieces of physical real estate. But you guys are going to basically tokenize a fund that holds, batches of real estate. So it's kind of more of a batching approach versus individual properties themselves. I guess what's going on with the real estate fund and when do you think that this will launch?
So the real estate fund's still a work in progress, but we're hoping to launch it sometime towards the beginning of next year. And it's really taking a kind of traditional property development fund, but tokenizing it and allowing it to be accessed globally, right? So it's not an entirely new idea. We'd be co-investing alongside real estate developers, and you would have, ownership of the property itself once it's been developed. So for example, you could develop a hotel and you would own the hotel in a fund structure, and the fund could then, reinvest the returns from the earnings of the hotel, for example, or if the hotel gets sold off, or if the units get sold off, that return goes directly back to the token holders of the fund itself. So it's just like transposing a traditional development project, but on the blockchain. Traditionally, those kinds of projects are, again, reserved for very high net worth individuals, and you would have a few people going in for a couple $1 million each. Now we're able to do it for tens of thousands of people. You can invest, say, $1 in a retail project, which generally are very good investment opportunities that have, up until now, been limited to the exclusive few who know the right people or who have enough money to gain access.
Matthew, do you think there's like a loss of the human aspect here, though? I mean, because traditionally when you invest in a fund, there's obviously a lot of time spent getting to know the team, the portfolio managers, governance, all those things. It seems like if anybody's able to purchase small amounts of a tokenized fund, obviously democratizes access. Way more people can have access to purchase these things. Yeah. But do you think kind of the due diligence goes down a little bit because it's just that much easier?
So I'd say for the vast majority of investors, they don't really have that kind of, face-to-face interaction with fund managers. Certainly not if you're investing in the likes of ETFs or mutual funds or any fund that has more than $100 million under management. You're not really going to get to meet the team or do due diligence to that extent, right? That's only really the case if you're an individual investor among 20 or so. And the counter argument, I guess I'd say in those cases, is that the way that we've modeled our business, at least, is very much to be consumer focused. So we've got our own Discord channel, for example, our own Telegram chat where you can chat to myself and the team, directly to our CEO on a daily or hourly basis. And that kind of transparency you really don't get in traditional finance, where things are way more, distance, I guess, and everything's far more siloed. There's far less accountability on an individual level. I think the kind of community that gets brought up around blockchain projects is the answer to a lot of those concerns.
Hey everyone, we'll continue this conversation shortly, but first a quick word from our amazing sponsors. Are you interested in getting into the cryptocurrency markets but don't know where to start building your portfolio? We have the answer for you. It's called Copy Trader by eToro. With Copy Trader, you can automatically copy every trade of eToro's top crypto traders at the exact price in real time. No need to study up on markets or develop your own strategies. Simply sign up and copy the trader of your choice. Any profits they make, you do too. With eToro, you get access to the world's most popular cryptocurrencies with transparent trading fees all in one easy-to-use app. Copy the smart money with eToro. Join now at b.tc/eToro reaction, linked in the show notes below. Just moving on, because I want to make sure we hit on it. Your solar fund, you guys shared a Medium post about 2 weeks ago or a week ago. Your partner, Nick, shared it. This looks pretty interesting. What's the download on the solar fund you guys are doing?
So it's an emerging market solar fund. And basically, the fund itself aims to invest in solar infrastructure, which are long-term leased projects lent out to medium-sized businesses and schools and things like that. And the leasees then pay interest returns on the solar panels that have been installed. And the returns are generally very attractive in emerging markets. And it's, a great project in that, you're promoting solar energy usage or the adoption thereof. And this fund has been launched initially with Sun Exchange, who've been in business for the past, I think, 5 to 10 years and have launched quite a few projects. So we're not the fund managers on that. we're providing the investment capital in the form of a fund to these kind of projects. So we're basically providing direct access to solar infrastructure projects. And again, there's liquidity provided for people looking to exit the fund with a liquidity pool in the fund. And again, you can trade on the secondary market, should you wish to do so.
That's awesome. Matt, you go through so much so quick. I'm going to have to re-listen to this. I love it.
I hope I haven't been repeating myself too much. I feel like the financial inclusion angle should come very strong through it, in my opinion. I think it's a very important part of what blockchain can do going forward. And I think that people have, perhaps been somewhat distracted by, crypto going to the moon or what the particular investment products are. But it's important to realize that the distinction between Bitcoin and blockchain, as people often say, is super important to make. And the bedrock upon which we've built all of our products, and all of our funds going forward is blockchain itself. And that's really what enables these cool features that I'm talking about. And that's far more compelling, I think, than any individual fund type.
No, for sure. And I mean, just digging into that a little bit, I mean, when you think about financial inclusion, are you thinking about a family in another country investing, $10 in this? Or is it just the idea that they were never able to in the past and now they kind of can?
Sure. So it's both. I mean, I think financial inclusion is equally applicable to emerging and developed markets. And people don't talk about emerging markets financial inclusion all that much because they don't really, it's not top of mind that only 0.1% of society, for example, has access to the best, investment opportunities or can invest in VC funds or property projects or whatever have you. But financial inclusion just means equitable access to financial opportunity. And currently, that's not the case really anywhere in the world. But a big focus to speak to the second part of your question and what we're looking to do definitely a lot of next year is focusing on emerging markets and being able to basically provide, a simple dollar-based investment product to people who want to invest, say, $10 or remit $10 across the globe, whether it's in sub-Saharan Africa or in Venezuela. These kind of financial opportunities should absolutely exist. And at the moment, traditional finance is just way too high friction that it's not possible for any traditional player to offer investments, say for like $1 at a time, because the cost of administration is just simply too high.
How do you handle education, though? I mean, it's great to be able to offer these things to emerging markets, but obviously it's a huge hurdle to not only understand crypto and blockchain, but then to understand investing in a solar fund or a real estate fund or, your VC fund. Like, how do you handle education?
So absolutely. I think the first part to touch on is that the kind of funds you'd offer would be catered to whatever jurisdiction you're offering them in, right? So you certainly don't want to be offering VC funds to the majority of sub-Saharan Africa, right? Although that's not to say that, individuals, they could be a PhD in finance from Nigeria. Individuals like that certainly have the capacity to decide whatever it is they want to invest in. But, broad-based, you do want to cater a little bit the products you're offering to the market you're going after. So you would want to offer savings products, basically, right? Simple dollar-based products, not really VC funds. To the second question on kind of user experience, and this is something that has been a huge thing in the blockchain space for the past year and will be going forward, is just that people shouldn't know that they're interacting with a blockchain. And we're aiming to build our platform and are in the process of some huge changes that will basically abstract that entire blockchain base away, such that when you log on, whether it's on your mobile phone or through an M-Pesa app or whatever it may be, you have no idea that under the hood you're getting issued tokens in a fund. And from an investor's perspective, it should be a simple one click to invest in whatever currency they happen to have.
Matthew, just diving into the differences of Invictus. I mean, if somebody wanted to tokenize an existing fund or tokenize a new fund, do you guys have any competitors in the space? Or, I'm just trying to nail down on the biggest moat you guys have. I mean, we obviously talked about a lot. I just want to get into if you guys have any competitors and what you think that landscape looks like. I
don't think that we have a huge amount of direct competition, to be honest. I think there are kind of two categories. One would be the more traditional turnkey asset management platforms, where they would do fund administration or management for traditional fund managers. The problem you kind of see there is that there are so many different intermediaries that it's physically not possible for traditional fund managers to offer products for $10 to people all around the world because their cost in doing so is just way too high. It's not a profitable business plan, right? So that's the kind of the first category of first category of competition, would be the traditional market players. And generally, they don't think of things in terms of an engineering first principles approach. So it's quite hard for traditional players to innovate and use blockchain tech to its full benefit. In my opinion. So the second class of competition would be people coming from a similar background to ourselves, where they have very much a tech-focused take on asset management. And there are a few people in the space like that, but nobody has gained nearly as much traction as we have in terms of the funds we have under management or in terms of our community size. And I think that's largely because we're very good at walking the line between usability and trust, where you have usability and trust, where you have funds that are easy enough to use such that you can gain a large enough community around them, but still acknowledging that there's a huge amount of trust placed in that kind of interaction. There are a lot of people who've created really cool ideas around decentralizing everything, but the problem is that you generally find that there's very little adoption in products like that, because the technology is so new that the familiarity you need to have with Ethereum or smart contracts is too high. So you don't really get the traction that we've kind of seen.
That makes sense. And, before we went on, we were kind of diving into how you kind of think that blockchain tech will change the way that traditional asset management is done. And, I get a lot of questions from my past life from institutional guys, how is blockchain going to change traditional finance, our internal processes, all of this? How do you think through that?
Yeah, that's a good question. So the premise, and something I've often said, like if the premise is that you want to redesign finance as it currently stands, how would you do it? And the answer is that you certainly wouldn't do it the way that it's been done currently, and absolutely you would use blockchain technology. So for me, it seems to be a no-brainer that eventually blockchain tech will be ubiquitous among finance. And it's really not hard to see that even now, the fact that we could manage 15,000 investors, we can manage 15,000 investors with one operational person, is really incomparable to what can be done in the traditional space. And the same would apply to banking or auditing, whatever have you. There are huge things that are already showcasing the use case or usability within the blockchain space that really make those old processes no longer relevant.
Yeah, that's huge. I mean, you guys have 15,000 investors across your funds now?
Yeah, we've got 15,000 investors from 148 different countries.
Yeah, that's pretty impressive. And how long have you guys been around? Or how long have the 4 funds that you guys launched been live?
So we've launched our oldest fund was launched in 2017. That's Crypto 20. So that's almost 2 years now.
Wow. Yeah, no, that's impressive growth. I mean, it's not only impressive growth, it's just that the point that you're talking about is having a large base of smaller investors is kind of playing out kind of as you described.
Absolutely. So it costs us basically nothing to have a community of that side. There's no ongoing administrative costs. And in large part, it's because the blockchain or the way we use our smart contracts, everything's automated. So if you want to invest in the fund, it's completely automatic. Onboarding's automatic. You can redeem your tokens in the fund within 1 hour, and there's no manual process involved in that. And that's just not at all how traditional finance works, where people are sharing Excel sheets between different organizations. You only need to look at how banking works, which is a multi-trillion-dollar industry, and to see like the tech that they use really doesn't make any sense. A huge amount of banking services still running a COBOL from the 1960s.
Yeah, you're not wrong there. And, it's probably a little earlier to discuss this, but I mean, it's probably going to be a while. Eventually, your funds, the tokenized versions, get listed on major exchanges, right? But I think what may happen sooner is, since they're ERC20 tokens, it'll be a lot easier for just some random entity to kind of spin up a UX or just use your portal. Do you think eventually that the tokenized versions of your funds will trade on major exchanges?
Do you mean major crypto exchanges or, more traditional exchanges?
That's a good question too. I guess both. I mean,
I think we're a long way away from traditional exchanges, to be perfectly honest. I kind of liken it to the internet in the 90s. It took a long while for adoption to really come, and it's difficult now from our position to say what's going to happen in the future. When nobody could have predicted Netflix or Facebook or Amazon or anything like that, and I think very much the same is true here. But it definitely seems clear to me, at least that that's the route we're going down.
So Matthew, it seems to me like Tokensets, also known as Set Protocol, may be somewhat of a competitor to you guys. I mean, they focus more on automatically rebalancing liquid tokens like Bitcoin, DAI, ETH in a decentralized way. You guys focus more on tokenizing the fund side. Do you view them as a competitor?
Sure. So I think the space is so new, and the people are still kind of figuring out where they fit within this entire asset management space, or like finance in general. So I would be very reluctant to call anyone a competitor, this early in the game. It does seem like Tokensets is focusing on kind of have a different approach to the product than we do. So from what I understand, there are a suite of smart contracts that interact with each other. And in that way, there's, no trust put in any asset manager or, in any person to do the fund rebalancing or fund administration. So everything's done automatically within their smart contract system. The approach we've taken is more one of cultivating or creating a community around our curated funds. And we use blockchain technology just to allow seamless access into those funds, focusing a lot more on user experience and the particular fund types that we offer, while acknowledging that our end users have to trust us a lot, given that we do keep custody of the assets. And in the case of our first 4 funds, we are the fund managers. Tokensets is going the more complete decentralized route. Everything should be done automatically, and everything should be done without having to trust the system itself. So I think that they're a super interesting project and worth looking at. But it doesn't seem like we're direct competitors at this stage. And if anything, our kind of approaches would be complementary to each other. Definitely this early in the growth of the blockchain asset management space, if I can call it that.
Matt, that's fair, and that makes a lot of sense. And just switching over to the traditional side of competition, I mean, who do you guys put out of business 5, 10, 20 years down the line on the institutional Wall Street side if you guys are wildly successful?
Yeah, so I think that a lot of asset management, within asset management, there are quite a few rent seekers and intermediaries that really don't need to exist anymore. So there are huge sectors of finance that can be grouped into that. For example, we can talk about transfer agents or fund accountants or fund administration. Auditing is definitely a field that would be replaced by our kind of technology. So all of those different intermediaries that I've mentioned, and transfer agents in particular, are the people who keep track of who owns what, or keep track of a share register essentially. Those don't need to exist anymore, given what you can do with blockchain technology. And the same could potentially be true of auditors. For example, you can have in future self-auditing funds where it's at a click of a button, you can prove cryptographically that everything is in order, and you don't need to rely on these trust-based institutions or government regulation to be sure that you hold what you think you hold as an end investor.
Awesome insight. And my last question for you, Matt, I mean, I'm just wondering about the second order effects of what you guys are doing here, right? I mean, you guys are democratizing access to tokenized funds that people otherwise wouldn't have access to.
Yeah.
I'm just wondering what the second order effect is kind of on potentially, if we go back to the VC side, I know it's not all that you focus on, but traditionally, VC investments are purchased by VC funds who have ultra high net worth investors, and then those deals are eventually sold to the retail at kind of massive valuations. Cough, cough, WeWork eventually, potentially. But it seems like through your way, that might be undone because now the valuations may come down because everyone has access and there's no more of this, arbitrage. Is that kind of a good way to think about it, or am I way off there, or what are your thoughts?
I think that's definitely an interesting feature that I would probably agree with respect to VC funds in particular. And it's also interesting to note that IPOs in the past decade have happened way later and later in a business's profile or a business's growth compared to when they used to happen, right? So as an individual investor, you're far less likely to make the kind of returns that people with huge amounts of capital to deploy will make. And I think that's fundamentally unfair. And the same can be said for most alternative assets. Generally, people go to alternative assets because they provide interesting investment opportunities or interesting return profiles in comparison to traditional stocks and bonds. But the majority of those very interesting alternative assets are reserved for the select few. So we do really aim to open up alternative assets to the emerging market, where people can gain access to whatever interesting products they wouldn't have otherwise been able to gain access to.
It's incredible. Matthew, where can people learn more about Invictus? Where can people follow you if they want to get involved and learn more?
Sure. So a good starting point is just our website, which is invictuscapital.com. You can browse around there to learn all about our products and see a bit of the team. There'll also be a link there for our Discord channel and for Telegram, and you're welcome to join those communities, and chat directly to myself or chat directly to the rest of the people at Invictus.
That's awesome. All the links that Matthew mentioned will be in the show notes, guys, if you scroll down. And Matthew, thanks so much for your time. You shared so much great information in such a short amount of time. I love that. Thanks so much.
I think it's because you're a great host, Tom. I'll deflect the compliment right back at you.
I love that. We'll talk soon, Matt. And it's been great having you on.
Great. Thanks for having me.
Hey, everyone. Thanks for listening to the episode. If you can go to iTunes and hit subscribe to the Chain Reaction podcast, it'll go a long way in helping us reach new listeners and help support the show. Thanks again.